Now come to the next. How to prepare bank reconciliation statement. After knowing the meaning of bank reconciliation statement, objective of preparing bank reconciliation statement, okay, what are the causes responsible for the difference between the bank balance as per cash book and bank balance as per passbook. After knowing all these things, now how to prepare bank reconciliation statement. So first of all, we draw a format of bank reconciliation statement. Bank reconciliation statement is prepared on a particular date, as on date. Suppose bank reconciliation is going to prepare on 31st July 2020. So we'll write as on 31st July 2020. It means on that date, 31st July 2020, we have to see that the entry is recorded in the cash book or passbook or not. That entry is recorded in the cash book and the same entry is recorded in the passbook or not, or entry which is recorded in passbook, the same entry is recorded in cash book or not. So that date is very important, date of preparation of bank reconciliation statement. So the heading will be the bank reconciliation statement. Thereafter you write as on the date of reconciliation. Suppose you are going to prepare the bank reconciliation statement on 31st May 2020, then you write as on 31st May 2020. And this date is very important. Important means in this date the transaction which is recorded in cash book, the same transaction is recorded in passbook or not, or the transaction which is recorded in passbook, the same is recorded in cash book or not. We do the comparison, we do the tally, okay, and then find out the causes responsible for the difference between the cash book balance and passbook balance. So first of all, we'll draw a format. Heading of the format will be bank reconciliation statement. Thereafter we will write as on the date of reconciliation which will be given in the question, okay, that this information you will get it in the question, as on which date. If it is on 31st January, then you will write 31st January 2020, or 31st January 2019, then you write 31st January 2019. Then draw a format, okay. Your left hand side will be your particular and right hand side you draw the two column for the amount. First column is for positive, second column is for negative value. First column is for positive and second is for negative. So the format is bank reconciliation statement at the top. You write the bank reconciliation statement. Thereafter you write as on the date of reconciliation. You have to fill the date of reconciliation. The format is particular, amount plus, amount minus. This is for plus, this is for minus, and this figure will be reflected over here in rupees. So first we will start with the bank balance as per cash book or bank balance as per passbook. The information which is given in the question, if in the question it has given that bank balance as per cash book is given, then we start with the bank balance as per cash book. And if in the question bank balance is as per passbook is given, then we will start with the bank balance as per passbook. So first information is bank balance as per cash book. As per cash book. So we will see in the question whether the bank balance as per cash book is given or bank balance as per passbook is given. We'll see in the question whether the bank balance as per cash book is given or bank balance as per passbook is given. So if the bank balance as per cash book is given, then we start with the bank balance as per cash book. Then next we see the bank balance as per cash book is favorable or overdraft. You know that cash book balance Debit balance means in cash book debit balance is favorable, and credit balance in cash book is overdraft, because in cash book we write the debit side receipts and credit side we write the payments. So if the receipt is more than payments, then it's a debit balance, then it's a favorable balance. And vice versa, if credit is more than debit, then it's a credit balance. Credit means payment. Payment is more than receipt. Receipt means deposit. Then it's a overdraft balance. Payment is more, withdrawal is more than the deposit. Then it's a credit balance. So we have to see the cash book balance which is given in the question is debit balance or credit balance. If no information is given in the question, then it's a debit balance, it's a favorable balance. So if it is a favorable balance, then you write the amount over here. Write the amount in the plus column. Okay. So is it clear? If the cash book have a debit balance, means favorable balance, then we'll write the amount in plus. And if the cash book have a negative balance, means overdraft balance, credit balance, then we'll write the amount in the minus column. In this column, here we'll write the amount. Instead of here, we'll write the amount here. If it's a credit balance. So if the cash book have a cash book balance is debit balance, it means it's a favorable balance. And if a credit balance, then it's a overdraft balance. Favorable balance means debit exceed the credit, and overdraft means credit exceed the debit. So if it's a credit balance, then it's a minus, then we'll write the amount over here, and if it's favorable, then we write the amount over here in the plus column. Thereafter, we will see the reason for the difference, causes for the difference. There are so many causes for difference which we have discussed earlier as well. For instance, first reason is check issued but not presented for payment. Check issued by the firm, by the company, but that check is not presented for payment. So come to the number one, check issued but not presented for payment. Suppose cash book balance, cash book and passbook. The balance of both the book is same. Both the balance is same. Balance in both the book is same at present. Now you see, check issued by the firm, by the business, but not presented for payment. To whom the check is issued? So when the check is issued, you know that entry is recorded in the credit side of the cash book. So cash book balance will decrease. Cash book balance will decrease when the check is issued. That entry is recorded in the cash book in the payment side. So ultimate effect will be what? Your cash book balance, cash book bank balance will decrease by that amount. But that check is not presented for payment in the bank, so passbook balance is not decreased. Passbook balance is not reduced by that amount, not decreased by that amount. So the difference is here. There is a difference. Cash book balance is here. Suppose 1000 check of rupees 1000 issued and not presented for payment. So cash book balance is decreased by 1000, where passbook balance is not decreased, same as it is as before. So if we start with the cash book balance here, bank balance as per cash book, so we'll do the addition and subtraction in the cash book side only to make the balance equal to passbook. So what we'll do, only this side we will use. So what we'll do, if we add 1000, then the balance of both the book will be same. only this side we will use, because we start with the cash book balance. We have started with the cash book balance. So only we'll touch cash book side, not passbook side. So what we'll do to make the balance equal both side, the cash book is reduced by 1000 minus 1000. Passbook balance is at here, it is not reduced. So if we increase plus 1000, then we'll reach to the original place. So both the balance will be same. So add, we have to add it. Check issued but not presented for payment will be added. We'll write in the addition side. Suppose cash book balance is debit balance, so we'll write in the plus side. This will be in the plus side. Next is interest allowed by the bank. Next you see interest allowed by the bank but not recorded in cash book. Interest is allowed by the bank, but information regarding that interest is not given by the bank to the customer. That's why it is not recorded in cash book. When the interest allowed by the bank, passbook balance, your passbook balance has increased. Suppose 500 rupees interest allowed by the bank. So passbook balance is increased by 500. Whereas the cash book balance is not increased because it is not recorded in the cash book. This is not recorded in the cash book. So cash book balance is as before. So what we do to make the balance of both the books same, using cash book side, this side only we can use it because we have started with the cash book balance. So we have to add how much? Add 500, then we'll reach to the same level. Okay, that's why add interest allowed by the bank but not recorded in the cash book will be in the plus side. These all 6 information is for plus, this 6 information is for minus. I am explaining one by one all these reason for the difference one by one. Next is amount directly deposited by customer. Suppose customer directly deposited the amount to your passbook, your bank directly, and the information regarding that deposit is not given to the customer. What will happen? The passbook balance will increase. Suppose customer has directly deposited rupees 2000 into the bank. So passbook balance has increased by 2000 and the information regarding that deposit is not given by your customer, your debtors to you. That's why you have not recorded that transaction in the cash book debit side. So cash book balance is not increased. So cash book balance is as it is as before. Cash book balance is here and passbook balance is here. This is the reason for the difference. Now you reconcile it. What we'll do, using this side, you add 2000 in cash book, your balance will be same. So we will add amount directly deposited by customer will be added. Okay, come to the next. Next is interest and dividend collected by the bank. Sometimes we give the order or instruction, standing instruction to the bank that you collect the interest, dividend or rent in our behalf. If such instruction is given to the bank by the customer, by us, by the business, then if the bank has collected the interest, dividend or rent, then passbook balance will increase. Passbook balance will increase. Suppose the 2000 is collected by the bank, interest plus dividend plus rent. Okay, but that information is not given by the bank to us. It means if the information is not given by the bank to us, then we have not recorded that transaction in our cash book. In the cash book debit side, we have not recorded. It means cash book balance is not increased. Cash book balance is as it is as earlier. So what we'll do, we do the addition of rupees 2000 to make the balance equal. So this will also be added by us. Next is check deposited but omitted to record in cash book. Check is deposited. Check deposited into bank but omitted to record or forget to record in cash book. When we deposit the check, the passbook balance has increased. Suppose we have deposited the check of rupees 5,000. That is recorded by the bank in the passbook in customer's ledger. But our accountant has omitted to record that entry in the cash book. So cash book balance is not increased. So what we'll do to make the balance equal, cash book balance is here, passbook balance is here. To make the balance equal, we will add rupees 5,000 to cash book side. Only we will use the cash book side to make the balance equal. We are not going to use the passbook side to make the balance equal because we start with the cash book balance. If we start with the passbook balance, then we will use the passbook side. But if you start with the cash book balance, then use the cash book side to make the balance equal. Is it clear? So 5,000 will be added here. Next is wrong credit. Next, you see the next one, wrong credit in passbook. In passbook, wrong amount is credited. When in passbook wrong amount is credited, the passbook balance has increased. Suppose 575 rupees, wrong amount is credited in the passbook, it means passbook balance has increased. And that mistake is not done by our accountant in the cash book, so cash book balance is not affected by that mistake. But when we are reconciling it, we find that the reason for the difference is what? The bank accountant has wrongly credited the amount which in the passbook. So reconcile it, you add rupees that much amount 575 in the cash book to make the balance equal. So add, wrong credit in passbook will be added. So you do the addition right over here. Okay, do the addition right over here. Okay, now come to the deduction, less. One by one we will explain about the less, which will write this side. Check deposited but not yet credited in the passbook. Check deposited, check is deposited by the bank, deposited to the bank. So cash book balance has increased. Suppose 10,000 rupees check is deposited into bank. So cash book balance has increased by 10,000 because that entry will be recorded in the debit side of the cash book in the bank column. So cash book balance will increase by 10,000 but not yet credited in the passbook. Passbook is not, in the passbook it is not recorded. It is not credited means it is not recorded in passbook by mistake, or the check which was deposited may not be collected by the bank. So if the check is not collected by the bank, that's why the bank is not credited. So if it is not credited, then your passbook balance is not increased. Your passbook balance is here, your cash book balance is here. To make the balance equal, cash book balance is 10,000 plus and passbook balance is here. To make the balance equal, we will use this side. To make the balance equal, what we will do? We will deduct 10,000. We will deduct 10,000. So we will write the 10,000 in the minus column. That 10,000 we will write in the minus side. In the minus column. This is minus column. Okay. Now see the next reason. See the next reason. Check deposited but dishonored by the bank. We have deposited the check into bank. We have deposited, suppose 12,000 check is deposited into bank. It is recorded in the debit side of the cash book in the bank column. But the check which was deposited by us, that check is dishonored by the bank, not honored by the bank. It means that amount is not credited in the passbook because that check is dishonored. Whatever the reasons may be, whatever the reason for dishonor, maybe the overwriting is done, maybe the check is teared, okay, maybe the date is wrong, maybe the amount, word and figure differ, word and figure, the amount what we have written over there is a different figure, maybe the balance is not there. So if the check is deposited and dishonored by the bank, so cash book balance has increased, passbook balance is not increased because that check is dishonored. Now we'll make the balance equal. What we'll do, using this side only, we'll deduct. How much? 12,000 will be deducted to make the balance equal. So this will be deducted. So we'll write the information amount in the minus column. In minus column. Okay, next is direct payment by bank as per our instruction. Sometimes we do the instruction to the bank that you do the payment of LIC premium, insurance premium, you do the payment of rent, you do the payment of tax, okay, you do the payment of electricity bill on our behalf. If such instruction is given to the bank and bank have done such payment in our behalf, so passbook balance will decrease. Suppose bank has done 9,000 rupees payment on our behalf for electricity bill, for rent, for taxes, okay, but that information is not given to the not given to us, not given to the business, okay. So if that payment information regarding that payment which is done by the bank is not given to the customer or to us, it means that transaction is not recorded in the cash book. Which side? Credit side, payment side, that is not recorded. So cash book balance is at here, passbook balance is at here. Now we'll reconcile. Now make the balance equal. Both the balance we want to make the equal using this side, only cash book side. Then we also deduct 9,000. Then we'll reach the same level. So 9,000 will be deducted. Okay. Next is bank charges and commission charged by the bank. Same thing. Bank charges or any commission charged by the bank. Then suppose 100 rupees charged by the bank as a bank charges and commission. So that is debited in my ledger. That is debited by the bank in my customer's ledger. So bank balance as per passbook will reduce by 100 rupees. And that information is not given to us, or we have not any such information regarding that bank charges and commission which is charged by the bank. That information is not given by the bank to us. So that entry is not done by us in the cash book. So our cash book balance is not affected. Cash book balance means cash book bank balance is not affected. It is as early. So the cash book balance is here and passbook balance is here. To make the balance equal, what I'll do, I'll deduct 100 rupees from the cash book. Then the balance of both the book will be same. So we'll deduct it. Next is check issued but not recorded in cash book. Check is issued. Check issued but not recorded in cash book. Okay. This is your cash book, this is your passbook. Okay, cash book and passbook. Check issued but not recorded. Check issued but not recorded in cash book. When the check is issued, passbook balance is decreased. Suppose check of rupees 5,000 is issued, that entry is recorded in the passbook debit side in customer's ledger. So passbook balance will decrease by rupees 5,000, but that check which is issued by us by mistake or we omitted to record in the cash book. We have not recorded that entry in the cash book, so cash book balance is not reduced. Cash book balance is not reduced by that amount. Cash book balance is not reduced. Cash book balance is here and passbook balance is here. Now what we'll do to make the balance equal, we'll deduct the same amount from cash book. So we'll write rupees 5,000 over here, okay, in the minus column. When there is a minus deduction, we'll write in the minus column. When there is an addition, then we'll write in the add column, plus column. Any wrong debit given by the bank, any wrong debit, any amount is wrongly debited by the bank in passbook. So in the passbook, if any wrong amount is debited, in the debit side, the bank write the withdrawal. So when they debit the amount in the passbook, the passbook balance will reduce. Passbook balance will reduce. Okay, passbook balance will reduce. Suppose 200. So passbook balance is reduced, but that mistake is not done in the cash book. So cash book balance is not reduced. Cash book balance is not reduced. Now we have to reconcile. Passbook balance is here, cash book balance is here. Using this side, what we'll do, we will also deduct rupees 200 in the cash book to make the balance equal. So we'll deduct it. Okay. Thereafter we do the comparison, which side is more and which side is less. You can do one thing, that you do the total over here, both side total you do. This is the minus side total, this is the plus side total. Okay. Suppose the plus side total is more and minus side total is less, then you write the difference amount over here. So when plus side total is more, so when we start with the bank balance as per cash book, the result will come bank balance as per passbook, just opposite will come. When we start with the bank balance as per cash book, at the end the result will be bank balance as per passbook. So if the plus side is more and minus side is less, it means it's a favorable. In passbook, favorable balance is credit. In passbook, favorable balance is what? It's a credit balance. So credit. So you write it over here. Suppose this side total is 10,000 and this side total is 9,000. Okay. This side total is 9, this side total is 10. It means plus is more than minus. So difference is 1,000. This is 1,000, difference is 10,000 and 10,000. This is the difference figure. So this difference figure is what? Plus is more than minus. So it's a favorable balance. Passbook favorable balance is credit. Vice versa, suppose that this side total is more. Suppose this side total is more. This side total is suppose 13,000. Okay. And this side total is 10,000. So you write the difference this side. Total is 13 this side. Write 13,000 over here. 3,000 difference amount. This 3,000 difference is what? Minus exceed the plus. So bank balance as per passbook, this becomes the debit balance. Debit means withdrawal. Minus exceed the plus. So minus 13 plus 10 means the resultant is minus 3. This is minus figure. So this minus figure indicate that bank balance as per passbook overdraft. And in passbook overdraft means it's a debit balance. Okay, it's a debit balance. In cash book, debit is favorable, credit is overdraft. But in passbook, it's opposite. Credit is favorable and debit is overdraft. Favorable. And this is what? Overdraft. Negative. So cash book debit is favorable, passbook credit is favorable. Cash book credit is overdraft, credit balance, and passbook credit balance is overdraft. Okay. So what we record in the cash book debit side, the same transaction is recorded by the bank in the credit side. The transaction which is recorded by us in the debit side of the cash book in bank column, the same is recorded by the bank in the credit side. And what we record in the credit side in the cash book, the same is recorded by the bank in the debit side of the cash book. When we deposit the amount into the bank, for us it's an assets, but for bank it's a liability. Simple reason. When we deposit the amount into bank, that amount is our amount. So that is the assets for the customer. But the same amount for bank is a liability because bank have to pay that amount when the customer want to withdraw the amount. So it becomes the liability. Is it clear? So that's why what we record in the debit side in the cash book, the same is recorded by the bank in the credit side. And what the entries we record in the credit side in the cash book, in the payment side, the same is recorded by the bank in the debit side, that is the withdrawal. Okay. So is it clear? So we start with the bank balance as per cash book. If the information is given in the question bank balance as per cash book, then we see whether the balance is debit or credit. If it is debit balance, then we'll write in the plus column. If it is an overdraft or credit balance, then we'll write the figure in the minus column. Okay? And thereafter we'll do these things, addition and subtractions, and finally at last we do the additions both side and see the which side is more. If minus side is more and plus side is less, it means the difference 3000 is minus. So this indicate that the bank balance as per passbook. We start with the cash book, so answer will be bank balance as per passbook. So if this side is more, your minus side is more, then the bank balance as per passbook means it's an overdraft balance. And if the balance of debit side is more, suppose debit side is balance is 5000 and credit side balance is 10,000, so the difference will be, this difference will be 5000, indicate that it's a credit balance. Debit means plus exceed the minus. So this difference is a favorable difference. Favorable plus. So passbook plus means credit balance. It's a favorable. Okay. So if in the question bank balance as per passbook is given, then we start with the passbook. Answer will be cash book. Answer will be cash book. When we start with the passbook, the answer will be cash book, and same what we have written in the plus, the same will be in the minus, and what we have written in the minus, same will be plus side. When we start with the passbook balance, suppose we start with the passbook balance credit means favorable. Okay, the same what we have written in the plus side, this will be in the minus side. Okay, and whatever the things we have written in the minus side, the same will be in the plus side. And we do the same thing, we start with the passbook, so answer will be bank balance as per cash book. Now you see the same thing, if plus side is more and minus side is less, then difference 5000 for cash book, it is a debit balance. It's a debit balance, favorable balance. Cash book favorable balance is debit, and if minus is more and plus is less, then it's a credit balance in the passbook. So this is the procedures of preparing bank reconciliation statement. Okay, it's very simple. It's very simple. Just like a balancing equipment. Just like a balancing equipment. Suppose this side is your passbook side and this side is your cash book side. See the first, check issued but not presented. Check is issued. Suppose check of rupees 10,000 is issued by the bank, issued by the customer, but it is not presented to whom the check is given. When the check is issued, it is 10, suppose 10,000 check is issued, this is deducted, 10,000 will be deducted from the cash book balance, and it is not presented in the passbook, so passbook balance is not affected. It is not affected. Passbook balance is same as it is. Now to make the balance equal, if we start with the cash book balance, we'll start with the cash book balance at the top, cash book balance. Then what we'll do, we do the addition and subtraction only this side. So what we'll do, we do the 10,000 rupees plus to make the balance equal. Now minus 10 plus 10, 0, and this side is already 0, equal. And if we start with the passbook balance, then we'll touch this side to make the balance equal. Then what we'll do, we'll deduct the 10,000 to make the balance equal. Okay.